Okay, everyone, welcome to Master Trader Live on Facebook. Just give me an okay that I'm coming through. You can hear me okay? And let's get going here because we're going to talk about swing trading today. Thank you, Gene. Thank you, Pat. And we're going to talk about capturing 2 to 5 day gains in stocks, ETFs, whatever we're going to trade. And we're going to talk about that utilizing trading, actually the underlying, whether it's buying or shorting it, and how to do that using options as well. So different strategies and tactics on how to take advantage of the same chart pattern. So stay tuned. Let's get going and let's delve into this.
You're watching Master Trader Live. Simple market analysis and education to help you make trades. Join us live each week on Facebook and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Thanks. Hey, Dan, how you doing, buddy?
Hey, fantastic, Greg. How's everyone today?
Awesome, awesome. Hey, we're kind of like on opposite ends here. You got the blue shirt, I got the red shirt.
That's what our coordinator told us to do.
We always take the direction. So awesome. So we're going to talk about swing trading today. Before we get started, those of you that are new to Master Trader, come to the site, sign up for our free chart of the week, and you're going to get fantastic information each week on a different strategy that we're trading, a different chart that we might be looking at. Lots of education. You can learn about Dan and I and Master Trader, and best of all, it's free. So why not? Right? So thank you for sharing, Justin. Those of you that are on here on Facebook, please, share the event with others and, type in MT to get on the list so that you get made aware of when we are live or have posted a chart of the week. We'll often post them there or some event that is coming up, when we're doing webinars for others as well. So yeah, type that in there, MT, and let's get rolling here.
All right. Yeah, we have a couple slides we're going to review first, but maybe, Greg, let's set the background just a little bit more clear, meaning you correctly said swing trading 2 to 5 day gains, but I just wanted to elaborate on that because there's many ways to skin the cat in generating profits and wealth in the markets. And the Master Trader strategies apply to all tradable instruments, all time frames, and like when we're asked questions, particularly like in our active green trading room, somebody just says, hey, what do you think of Home Depot or FedEx? They hear us say all the time, well, what are you looking at it for? A day trade or scalp trade, a swing trade, which we're going to cover today, a long-term investment, a buy and hold, because the setups and the strategies of managing each one of those are very different.
Right. It's all about changing time frames, and whether daily and weekly, which is primarily what we're going to use for the swing trading. But as Dan mentioned in the green room, we utilize intraday time frames as well. But FedEx was one of our trades today, Dan.
Absolutely.
Right. And reasons for why we take trades ultimately come down to the chart pattern. But there's what we call intermarket analysis. So why FedEx today? Well, part of what brought my attention to look at it was the strength in the transport. So they stabilized yesterday. They were doing well today. So at the top of my minder or watch list as to what was doing well, which was airlines and transports. I said, let me go take a look. And FedEx was coming off a low, and that presented a pretty nice opportunity, which looks like what Dan likes to call a no-brainer.
A no-brainer, correct. It could be, right. Income trade and maybe 1 to 2 to 3 day swing trade. Yeah. Swing trading is awesome time period because the normal ebb and flow of stocks we're trying to capture. I'm just making up this number based upon our entry and exit. Let's say 80% of these ebb and flows on the daily chart. So the sum of the parts is much greater than a buy and hold. And it doesn't take a lot of time. So whether you have a full-time job or retired and like to golf, you can put on these swing trades based upon the strategies that we're about to show you here. And you just manage them in between off the daily chart. And they're very easy to generate additional profits.
Right. And daily chart being a key comment that Dan made, because those of us that do focus on intraday opportunities as well, that could be a real deterrent to the swing trader. You're getting too close to the action. So when we look at swing trades, our money management, our stop loss, our targets are based on the time frame that we're trading as a swing trader. So for those of you that are in front of your intraday, charts during the day, realize that, what happens on a 5-minute chart can be totally meaningless to what's happening to the swing trader. And, if you have been stopped out of what looked like a great trade only to see it do exactly what you thought, you know what I mean.
And a daily chart could be noise to somebody trading off a monthly chart, trying to capture, 50 to 100% returns on things.
Yeah. And you know what, Dan, you and I both know that comes with the territory of experience and learning, and the discipline of not going there where isn't to your advantage. And that could be the 5-minute chart to a swing trader.
Right.
Yeah. So, let's get going here. Yeah. So when we say proper trading is knowing what to think. How do you know what to think? It's kind of like a saying that you've probably heard. How do you know what to think? Well, we look at charts. Some might look at fundamentals and say, hey, this is a P ratio and this is expensive or this is cheap. And we know that can be very misleading. But when we look at the chart, it's very easy to tell. Is it going up, down, or sideways? Is it near support? Is it near resistance? And we keep things relatively simple with the chart analysis. As the slide says, it suggests the future direction of prices. Or as we like to look as far as option strategies, which we'll talk about a little bit, maybe there's no direction, and can be an advantage, or where it's not going to go. Right?
Absolutely. Yeah, it's funny, when people, you talk to friends and family and colleagues and this and that, it's so funny. They look at the Dow. If it was up 300 points for the day or something down, and they just immediately conclude, oh, you must have had a great day. And there's just so many things they don't comprehend with that. They may not understand, a gap up. They might not understand, the multiple time frames, the income trade, so many things. So, you just try to educate them. But yeah, we say that managers and directors can lie, via their fundamental analysis, but the charts don't lie. Something hypothetically going up on bad news is bullish and vice versa. So Greg has a saying, we're always in information gathering mode because we're reacting to what is true. We use the word objective, which right out of the dictionary means existing in fact, not subjectively. You aren't subjecting your wishes onto the market or a particular position. Stocks are inanimate objects to us. They're just setups that on the time frame we're trading, we're trying to pull profits out of them by doing what we're going to show you today: pattern recognition, enter, and manage in between.
Yeah, we try and keep it simple. Right? Now, when we look at charts, of course, we look at the typical things, different patterns, of course, but we like to view charts, especially from the point of view of what is it telling me about what others believe? What are their expectations? What are their beliefs? What have they done? What are they likely to do? So some of the charts that we'll talk about, I like to refer to them as pictures, keeping it simple, is that picture communicates to me prices are going to go up, down, or sideways, especially was there a shock or a failure?
Yeah, greed and fear.
Hey, now I love it when I can find something, where prices gapped possibly in one direction, and everybody was, not everybody, but a lot of people, especially those that are managing big funds, were caught off guard because that creates opportunities. And so, especially with swing trading, because those gaps occur on daily charts. So, as we look at these, and we look at these candles, you see, that's why we call it candle language, because they speak to us about what's happening and what is likely to happen.
And is that what your professor asked you? Is that his picture in school?
Well, he says, "What are you thinking?" And you know what was his quote about crazy? Right?
I don't remember.
Doing the same thing and expecting a different result.
Over and up. Absolutely.
Right. So, so when we think something, and part of our approach as we're educators as well as traders, it is our method is one in which it allows you, it actually forces you to update information. So the way we look at candles and what we call bar by bar analysis and putting together trends and such, it's like if you look at that little picture that is up there now with the guy with his hair.
Einstein, yeah.
And it's like, so as you look at that from the point of view of a bar by bar analysis, ask yourself, what did you think on the first bar, the second bar, and then the third bar? Not that you saw them all at the same time, but as they were created. And you can see and feel how your thoughts and even your emotions change. If you think of this from the long side and you bought that stock, on the green day, you were high-fiving, you calling your wife and say, "Baby, I'm going to buy you that new whatever." On the third day, you're like, "How do I tell her it's not so?"
Exactly.
Right? And it's like the profits are gone. So we look for these opportunities to keep us honest, so to speak, about our expectations. But when we see a picture like that, it presents opportunity because we know somebody's caught on the other side of that ugly reversal.
Exactly.
Now, reversals can happen in a lot of different ways. So what we teach our students is to understand different pictures. That could mean the same thing. So as you look at those pictures, those reversals that are happening, let's start from the upper left, which is your typical pullback type of reversal that we look for, which we have to put in the context of support, resistance, and trend, and so on. And then the middle one, right? Call it simple. Call it what you want. So you candlestick aficionados might call it Morningstar. Maybe I forget the names, honestly.
Ask Steven.
Yeah, I mean, I just look at the picture and I'm like, that's going up. Keep it simple. The 180 reversal. Now, here's something that really can help you understand it. If you read any of the candlestick books that are out there, the websites, those are teaching, they're going to have a name for the one in the up at the top middle. Then they're going to have another name for the one on the upper right. The only difference could be the time frame that you're looking at. So it's a reversal. It was going down and it's going up. The middle one on the left, we have what we call a red bar ignored, which, Dan, we had one of those yesterday in the S&Ps on the 5-minute chart. I think it was the 5-minute, the 15.
Without a doubt.
Here it was, right? It came to resistance, formed a reversal, didn't happen. I mean, it was negated just like that.
And and I mean, just to brag on your behalf, we have some trial people in the green room, and we got 3 emails yesterday saying, "I thought it was just magical of you, Greg, within 10 minutes of market open, saying, just buy the market now. It's not coming in. If XYZ, the put call ratio was flagging a floor in the market, and then it went straight up on an hourly chart all day, and people were just amazed with that recommendation yesterday."
It looks like magic, but it's really just knowing to look at the right things.
Okay, but you deserve a compliment, and that's part of what we're teaching today. Step one is having a method. You don't just say, "Oh, I'm going to go trade in the market." What is your method to have an edge? Right. Ours is the master trader strategy, chart analysis, market internals, enter, and manage in between. So then it's experience, it's seasoning to experience and internalize the concepts that we teach.
Sure.
And that is why you just said, "Oh, well, it's easy." That's because you have the expertise and seasoning. And that's what, we try to help people.
Yeah, you're right. I shouldn't make light out of what has become second nature.
Correct.
But I use the tools that I've learned to use. One of them is when to be a contrarian and when not. So you're not a contrarian just because prices are going down and you think, "Oh, I should think opposite." No.
Right.
But yesterday, when I saw option traders by the measurement of a put call ratio were betting that the market was going to crater, I was like, historically, this doesn't happen. So it was about probabilities.
Coupled with, you waited for price action to confirm that probability. Right.
Absolutely. So let's move on here with these candles. Now, that one in the middle, it says any condensed. So we're looking for bullish setups. If we condense the information, now let's assume that all of these other pictures that are on these slides are intraday timeframes or maybe daily timeframes. And the one in the middle is the weekly. So, and don't count the bars and say, "Greg, that one's got 2 bars or whatever." Understand the concept is that as you compress the data, it can look like one candle. So it went down and it went up. Right? We love the KISS method, right? Keep it simple, stupid. But you have to understand these things to make it simple, not be caught up in all the different indicators and lines and so on and so forth, what I call a spaghetti screen. Learn to read the price action and put these candles in the proper location, right? Bullish setups near support or breakouts. So I don't have to explain them all, Dan. I think everybody's got the gist of what to look for here, but
absolutely, yeah. We call these, bullish money patterns, and again, we just put them in the context of multiple time frames, support and resistance.
Right.
And this is our methodology. So now, and we're going to be doing it here live with you when we're done with these couple slides. But then our job is to go to the marketplace and scan for these pictures. And then just find the best of the best, and that's what we trade.
Absolutely. So what are we looking at here?
Yeah, this is actually an open trade in the Master Trader advisory letter, and you can just start left to right, and there was nothing to do in that April consolidation until early May. Wide range igniting bar out of consolidation on huge volume, that gets our attention. We may or may have not have had a trade then, but then it can stop.
Yeah. No, it didn't catch my attention, but it was in one of my scans, but I didn't catch it at that time.
Yeah, that's fine.
Yeah.
But then stocks can either consolidate over time with a shallow retracement, which this one did. And if you think about what that means, it means buyers and sellers are exchanging shares, but it's not getting much cheaper. So it's holding the strength of that current price.
Right.
And then it broke out. That was a buyable opportunity where the arrow is. And then when it pulled back to support, you see the red line, which was resistance. That's your breakout. And then we made the green line because after it breaks out, a bullish retracement to that same area is a support area. It's minor support. We had 2 reversal bars there. That's when we gave it to our advisory clients, and we sold half at a big, huge percent gain, and we're just trail stopping the back half.
Yeah. So let's just back up a little because you know how we like to have people understand why we do things and when we look at charts as to what they mean. So this isn't exactly what happened yesterday, of course, but if you think about it, what happened yesterday? What kind of trend was there yesterday?
Gap down and straight up.
Right. Power uptrend, right? It didn't pull back. Now, it's not exactly the same here, but the point being that consolidation over time is what we call creating support. And think about why breakouts work. Some of them fail, but they fail primarily because of the structure of how they formed, which is another conversation. But what happens, what do we all think about when you see prices rise quickly? A couple of thoughts.
I mean, greed, they're chasing it. They want in at all cost.
Well, so we want in too, right?
Right.
So what is the primary thought? If it's going up, it's like, I'll get in on a pullback.
Right.
What happens when it doesn't pull back? Well, buyers are continuing to come in. That's strong demand. And that now those of us that are not buying at that point, because obviously we think it's a little bit too high here, we'd like to get it at a cheaper price, it'll pull back. And as it goes sideways, and if you apply this bar by bar analysis concept that I spoke about, and this is something that I created years ago to help myself in exactly this way, not to get caught in the past. Because what happens when prices go sideways like this, and what happened yesterday is the realization that the pullback isn't happening, it's time to pay up. And that's the essence of a breakout. When it starts to break out, you want in, pay up. You're not going to get it cheap. Now, I didn't buy that breakout at the time because I wasn't even watching Iggy, as we call it. That's the symbol there in the lower left, Iggy. EIGI. But I did find it on the pullback to minor support with the bottoming tail bar that was a minor shakeout on a smaller time frame, which was followed by an inside day next to that bottoming tail bar. And for me, that was the money setup.
Nice.
That master trader buy setup at minor support in an uptrend with a rising 20 and 50, railroad track effect as those moving averages are rising with a tradable void above. Get it.
Wow, you threw out a lot of concepts. Do you teach these?
I have. Yes.
No, I know. You know, for the folks who know us, and if you don't know us, you will never, not once, hear us use the word proprietary, like many other nonsense, people try to convince you of to put money in their pocket. We teach you what is real, what is objective. We have, different buckets of subscribers, as we call them. Some people just want to be told what to do. They want to go on the golf course, and we got one email the other day saying, why do I need to learn how to scan? You all are my scanners. I drink coffee in the morning and I wait for you to send me an alert.
That was fun.
Other people, I know, we have other people who want to learn. And that's exactly what we provide in many of our services, seminars, and the letters.
So then let me explain what prompted that email that the subscriber sent to us that was in the green room. Was that, Dan and I show our screens throughout the trading day. And I've set up many scans, whether it's for intraday, swing trading, and so on. And one of the services, as part of the service, is that those that subscribe to the green room, I provide my scans and platform setups for free. As a subscriber. And the idea is I want to share this with you so you're looking at the same thing and we can work together to make more money, because I've only got 2 eyeballs and put more eyeballs in there that are looking at what I might miss, and that's great. So I said, hey, those of you that are in the room here, if you're on trial, and you've subscribed, just email me and I give you the scans through the platform that I use, TC2000. And I forget the fellow that emailed Dan. He said, what do I need a scanner for? I got you guys. You guys do the work. You tell me what to do and I make money.
But it's actually a valid point. I mean, I told him he's totally right.
Right. So I did get an email, Dan, and why I wanted to put this slide in there. I got an email when we sent out the notice for today's event. And the fellow said, hey, you know what? Please talk a bit about money management.
Awesome.
Yeah. And, so this is the basics of money management. We get much more, advanced about it in the advanced management course. But the essence of it is, and this is something that's so important in today's markets, in that this particular setup, which worked out fantastically on Iggy, doesn't always work out so smoothly. And with the high frequency trading, this setup that I've been trading, since the mid 90s and a little before, there are jiggles today that weren't happening back in the 90s. And that requires even more so an understanding of money management. So in this slide, the essence of it is to say, how much money do you want to risk on a trade? Right? You can't just say, hey, I'm gonna always buy 1,000 or 2,000 or 500 shares with no regard for the stop. So, and the stop is always based on the chart. So looking at this slide, it's very easy to say, hey, you know what? I'm not as certain about this setup. This high frequency trading has nailed me a few times with this setup. It's not a retest type of pattern setup. So why don't I give it more room? And it makes it so easy to do that just by calculating your share size based on your maximum risk. Where's your stop going to be? So as you see, as we bring our stop down, fewer shares, we're still risking the same amount of money. And what we're looking to do at some point is add to the position once it's proven itself. Now, you might say, well, what if it just goes up, Greg, like Iggy did? I still own something.
Correct.
Right? I'm making money. It's better than no money. Right. So it's a win-win. And as you learn how to use it, this basic understanding of money management, and you start to use the advanced concepts, it's incredible. So, I mean, I can tell you some of the positions I put on yesterday, Dan, if I didn't do it in this way, I'd been stopped out. Right. One this morning, the tractor TSCO, I didn't exit it because it's a great setup on the daily, but it came back in, didn't hit any stop. But if I oversized it, well, then I would have sold it on the gap up. Right. And the other on the VMware that we're in, that's kind of dogging it, but it still looks okay from a swing trading perspective. So you got to put everything in perspective with money management.
Perfect.
I hope that helps. So whoever emailed me, I forget who it was, but this should be beneficial to everybody to understand that even this basic money management.
And just a quick side note, just notice, folks, that there's absolutely no prices or time on these candlesticks that we grabbed this example, because the reading candlestick language bar by bar and putting them together in patterns, whether this is a 5-minute chart, a daily, weekly, or monthly, the strategies and analysis is identical.
Absolutely. So here we're looking at gaps, and gaps are a great starting point, even for swing trades. We can trade them intraday as a gap trader. And so I put here, that URL is to our Gap Trader course. And if you're interested and you're an intraday trader, and I cover swing trading in there as well, not as much as the primary focus is day trading gaps, but you can use that code for a sizable discount on the course. But professional gaps, they do what the chart says it should do. Meaning in this case, there was a reversal. The BOF means a breakout failure. And you have a topping tail that took out those highs. So there are many elements here to this setup that says it's a pro gap and it should go lower. And it shows, the opening gap there, exactly where it says. So that provides us the setup to say this is going lower. And if this is a daily chart and it's in a downtrend, let's assume it's at minor support, you can short that as a swing trade, and it's a great opportunity as an intraday trader. Now, a novice gap here, and we see prices are going down, and you see the range begins to expand near the end there. But one of the concepts to understand with candles, or just looking at a bar chart, is that when the range expands, it says that there's a motion involved. So again, bar by bar analysis, put yourself, and I'm putting you into this setup, and you're long 1,000 shares of Amazon. And each day it's going down, and you see your P&L red, getting redder, and the loss is increasing dramatically. How are you feeling on that last bar? How you feel, Dan?
You would be puking.
It's very painful, right? So,
right. That's a picture of fear, of pain. And, the opposite is greed. I need to get on this thing. And you're buying after, 8 up green bars.
Right. Now, where this is going down, if you were long and it's starting to inch down, you're like, well, maybe it'll turn around. It's Amazon. We know Amazon's not going down right now, but let's assume that it was. And you're long, you got your 1,000 shares, you didn't calculate your maximum loss as covered on that slide, and now you're down 10,000, 12,000. The last bar, you're down 20,000. And by then you are convinced you're going to be down 50,000, right, in the next 5 minutes. And you hit the sell button. This arrangement of candles is telling us, when we see this wide range bar, that it's near the end of the move. So let's again assume it's a daily chart. We're looking for a swing trade, and it gaps lower. That's a novice gap. And historically, that sets up a reversal, which, if we put this in the context of other concepts that we look at, can set up a nice swing trading opportunity.
Yeah, and on the next slide, we're going to, show you the difference between a directional and an income option trade. But these patterns that we're talking about here on the novice gap from multiple red bars is one of our specialty strategies, because after sell-offs, volatility is rising. And so we wait for the chart to give us our short-term turn, and we sell an out-of-the-money put spread. We're getting paid huge premiums for taking the risk of calling a short-term bottom. These, we love these.
Those of you that are on Facebook, please share, like the page, give us some likes and some of those hearts, and we love that too. So let's talk about ways we get bullish on stocks and ETFs.
Right.
Why don't you explain that, Dan?
So, there's different ways. When we say we want to increase our bullish exposure, okay, well, how do I do that? You buy the stock. You have unlimited gain. You put in your stop loss, as we just spoke about, but it can be capital intensive. Greg was throwing around terms of you're buying 1,000 shares of Amazon. That would require a pretty big account. And if you're, when you calculate your return on capital, that's ROC, your gain divided by a big expensive stock is it's not going to be as big. But still, swing trading is perfect. We do it all the time. That's what, if you're just joining us today, that's what we're focused on, is swing trading, stocks and ETFs using stocks and options. So that's one simple way. You buy the stock if you're bullish, you short it if you're bearish. Directional option trades at Master Trader, we just divide them into 2 simple categories. And it's going to be determined by how bullish we are on multiple time frame analysis and those patterns that we just reviewed. We look at them, How bullish are we? These are directional strategies that we teach and use. You can buy a call option, which gives you the right to buy the stock, and you pay money for that, but it's significantly less cost than buying the stock. So that gives really big return on capital is buying calls when you're bullish. But you need to do it intelligently, because when you buy options, it's a wasting asset. So if the stock doesn't move, it's gonna, we show you how to get around that problem. You
can buy. Before you go on that, in the room today, you mentioned a trade that we had on that hadn't moved, and we still made money.
Happens all the time. Yeah,
I think it was.
Yeah, I do. WLL, absolutely. Yeah. The stock in 2 days was, it fell and it came right back up. We had an out of the money bear call credit spread, and it was kind of right at the same spot, but we still had 50% of maximum gain. And so that is a great way to use options when momentum slows on your stock positions. And we teach you this, obviously, in our courses, and we call it an option layover strategy. And we do that to bring in premium, which pays us while the stocks are going sideways, chopping around doing nothing. Then, we have a bull called debit spread or diagonal, but, we aren't going to get into that today. But those are just different flavors of bullish directional trades. These income trades is the other bucket. And we absolutely love these, and because we're going to show you patterns here right now in 2 minutes, that we wouldn't trade the stock because we don't have a compelling setup. But when we're selling these credit spreads around bullish or bearish turning points in the market, we're literally getting paid day by day through time decay of the options, which is hurting the option buyer, is our profit. And all we're doing is predicting a short-term top or bottom. So we, both in our Master Trader advisory letter, and we have a Master Trader weekly options trader that just totally specializes in selling these credit spreads on options that expire 10 days or less. So that's a fantastic course. And then, the master spreads that you have seen there in the green link, that is an awesome course I just finished over a year of making, which shows you exactly how to find these setups, how to enter them and manage. So now with that in mind, we review the patterns. What is a successful trader? It's having the disciplines and patience to follow your trading plan, your methodology. And then when you find them, you strike. That's what we're going to do right now. We're going to go hunting for these setups together. If you don't find the setups in the broader market, which I kind of refer to as the mothership, is not giving us conflicting signals, then we SOH. We sit on our hands and do nothing. Just like a hunter going out and hunting whatever he wants to hunt, you just don't go firing. You wait for your setup. And that's all trading is.
Someone asked me to put the course link into the chat, so I'm going to do that, Dan. Let's give a second, and then we'll go hunting, as you put it. Which, that's what we do every day. We go hunting, looking for those opportunities.
Well, I can do it, Greg. Why don't you pull up your charts?
Okay, so let us switch here. And let me put on a screen that I hunt for swing trades on. Well, I've got a couple of them, of course.
But the guy drinking coffee, waiting for the alerts, he doesn't care about this.
We share it, so, you get to see it in the moment, and everybody understands it that are in the chat room. Once you're in there for a little while, you see these things over and over. So as we these scans are looking for, as you can see from left to right, excuse me, wide range bars. I showed you the 180 reversal. We looked at it on the slide, bottoming tails, wide range red bars, topping tails, 180 down. And these are just big ranges. Now, this will be enough for us to talk about for the next 2 days. So we don't need to go to other scans, but this is a starting point. And with some of these, you might say, well, that isn't such a clean pattern, but I'm not looking for the most exact patterns, because someone that has done scanning for years, I know that if I narrow it down too much, I'm going to miss opportunities. So I like to leave my scans that put me in the right ballpark, so to speak. So let's start. And some of these are going to be big bars, and we just skip right through them. Okay. So wide range bar, clearly daily chart, wide range bar. You can see multiple time frames. And right now we don't need the hourly. So let's just get rid of it. And as I go through this, I say, is this a swing trade for me now? No. It could be in a couple of days, range bar, and we'd look for a continuation pattern. I could just move this over to an interest list. JPM. No, it's at resistance. This is a watch, Berkshire Hathaway. Wow. Why would I put this on the watch list? Well, you go through different concepts, but it cleared one resistance area and it came up to the next resistance area. That suggests, and look at the weekly chart, that suggests that it can go higher. So now consolidation and we'd look for continuation.
And plus, it gapped over an ugly red bar yesterday.
Right, right. So different concepts as we look at the charts, right? We can spot opportunities. Now, I know what Dan's thinking right now, but we know that there's no juice in it, Dan. Right?
We looked at this one yesterday too. Absolutely.
So this is an excellent setup when we can find what Dan has called the juice, which is, and we can look at FedEx because that one had the juice. We look for a chart pattern that says prices shouldn't go back below a certain area or above a certain area. So would you all agree that Region Financial, say in the next, let's say 3 days, won't go to $17? It doesn't mean we're going to find something for 3 days, but we would if we could find it, we would coin it as a no-brainer.
Well, show them the FedEx if you like, because we did that this morning. Let me see how much profit we have on it already. So we sold this morning, and because Greg already talked about it, the strength in the transports, this has a consolidation. It was breaking out on an intraday. See that line in the sand of $230?
Right.
So we sold a bull put credit spread that expires this Friday. So we sold the 230 put, and then we bought the 225 put to make it a spread. We sold it for 48 cents. We can close it right now at 22 cents, just a couple hours later.
Right. So
we are already in a few hours we haven't booked it until we close it, but we have open profit of 60% of our maximum gain. And that's
what, in an hour, 2 hours down?
Yeah, a couple hours. And that was not a pattern that we would have done a directional on, but it's a pattern of that looks like that low is going to hold until Friday. That's an income trade, and we find them every single day. I think we gave 4 recommendations already this morning.
Right. And some days there's like more than you can handle, and other days, it's thin, but that's the markets, and that's why these scans are so helpful to find opportunities, because the computer looks for the criteria that we want it to look for. Makes it relatively easy. So what I do, right, is we're looking through things. So with the scans, I just look at the pattern. Let's just put this over here for a second. As I go through these, I have the option tables here. I think if I click on it, because I have them separated, it's going to disappear. But so I click on FedEx, I look at the pattern, I immediately think to myself, it shouldn't go down below $230. And I look over here. And so a couple of days, I look $230. This was much higher before. I'm like, okay, that makes sense. So simple. I love simple. Then it was like, hey, Dan, take a look at that. I was like, okay.
Done.
That's a trade.
Alex is actually asking a great question. Alex is asking, hey, but with volatility so low, how do you guys still find these good setups? A couple things, Alex. Number one, we're in low volatility environments, 70% of the time, or whatever the exact number is. We let the pattern dictate if it's worth taking the risk, and then I call it the juice. I go see if we're going to get, if it's the premium that we're going to put in our pocket is worth it. So for this one, it was $5 wide. We took in 48 cents. That's almost 10% of the $5 wide for 2.5 days of risk. I don't care what the volatility is on Federal Express. There's some educators out there who say, oh, don't even consider it unless it's over 50% of its range. That's baloney to me. If FedEx volatility was 0 right now, I would still sell that put spread for 48 cents a share for the reasons that we just covered. We prefer, of course, selling high volatility. Why? Because I can point to that FedEx. You can go back to FedEx, Greg, if you want, because we sold a put spread on this when it collapsed, and we took in $1 a share instead of 48 cents. But I think that one was 8 days to expiration. So yes, we get paid more in times of fear, but we find compelling opportunities every single day.
Yeah, I think because we don't just rely on volatility or Greeks and its chart patterns, it opens up other opportunities, maybe more opportunities. But as we look for those patterns, it's just so simple, Alex. It's like you see a pattern and you say, prices shouldn't go there. You look at the options table. Is there the juice? Yes or no? No, move on. So we hunt more during periods of low volatility, whereas a high volatility, it's not going to take much hunting to find the fruit.
But Greg, let me ask you a question. There's some option traders out there who say it is impossible for you to call market direction. So why are you confident of 230, this magical price holding by Friday?
I would say 30 years of looking at charts. So anyone that would say it's not possible, I would invite them to come into the green room and I'll show them how I do it almost every single day.
Hey, I like that offer.
And if they come in and say, hey, my Greeks are saying to do this, I'll either say, you're right this time, or I'll tell them you're going to lose money.
Exactly.
And that's what the people that refuse to use charts don't get. I can predict relatively pretty darn accurate when they're going to lose money. And they refuse to look at that. What do they say? You can lead the horse to water, but you can't make him drink.
Right.
So where did I find FDX? Honestly, it wasn't in a scan at the moment. That was just a thought of, let me go look at what's in the transportation index, since the transports were acting bullishly today. And I saw that. I looked at the options table and I said, that makes sense.
All right. So, the spiders are acting well today. So let's keep hunting here to see if we can have some watch items for the afternoon.
Yeah. All right. So let's continue. So let's look at 180s. All right. Well, no, that's not going to see a lot of things. Here could be a put spread candidate with this type of big reversal, 180 reversal. It's not a directional play, but we would look for where this maybe wouldn't go. So I look at something like this and I say, well, 2650 makes sense. It's relatively close, but there's no juice for 2 days. 9 days, 2650, nothing. Move on.
Perfect.
And so I can flip through these, and in a second, I know whether I'm interested. And this is interesting to me as a directional. It's consolidating at resistance, bullish price action. What do? I set an alert.
And I'm doing the same thing.
It's just set an alert. There you go. It should happen within a week. Move on. And let the computer watch it. All right. This one a little sloppy. Nice uptrend. It's a REIT. It's too slow. Too big a bar. And we just go through the process. There's, well, right? There's a put spread candidate. Oil sector moving. Right? $33. Nothing there for 2 days. 30 days. So this one only has monthlies. And you could sell it naked for 40 cents, maybe. So this is the thought process and the analysis every single day. And I wouldn't want to own this at $33, but that seems like a no-brainer, right, Dan?
Absolutely.
If you sell a naked put at $33, that'll expire. Well, this is going to be 30 days. So I mean, if it was 9 days, I would say, let's do it.
Right. And then we would check earnings. We don't like holding over earnings for that unknown gap risk.
Right. So those of you that, if you're not familiar with this platform, and part of it is how you set it up, of course, but we know here the earnings are listed right there. That's how I set up my chart.
Right.
To be able to see it immediately. Well, let's look at some bearish stuff since we're kind of getting a little late here. But bearish wide range bars, not interested. It's in an uptrend. Right? Not interested. Sideways, Apple. Right? This hasn't been acting well as of late. Not moving up with making new highs with the Qs and technology.
But on Apple, under yesterday's low, even if it hits tomorrow, we would consider selling an out of the money call spread that expires Friday.
Scan is that. This scan says right here, it's a bearish wide range bar. And it's relative. It's looking at the average of bars. So, I mean, this may not jump out as a wide range bar as this one does, right? But it's just looking. And again, my scans are not made for every single setup to be perfect. I don't want that. No, obviously a wide range bar. What can I do with this? Probably nothing. But as an intraday trader, I would be interested, but that's another discussion. And so we just go through these every day, looking for scans, opportunities. I saw this one today, but there's no premium up above this area here. This one. I mentioned this today, Dan.
I already looked earlier, and it's earnings next week. I already looked.
Yeah, earnings are next week. But why would we like this? Because it broke out and it failed. It traded back below the breakout area. Yep. So we just ask ourselves, what's the likelihood of it going back above here? And then we see how many days to expiration, and is there opportunity there? The concept is so simple once you've learned it.
And we manage in between. We don't put these trades on and go to sleep until expiration. If this traded above that prior high, we would either stop out, we would adjust, and we have different adjustment strategies, or we might even then turn it into either an iron condor, go long. We'd have to see what it looked like at the time. But we don't put our head in the holes and just roll losing positions. We manage them, both the profit side and if it's going against us.
So Alex is saying, do we put the trades on at the open? We usually won't put on a trade right at the open, Alex, because we want to see if it gaps. But we put these trades on in the middle of the day, off most of the time, and we send out alerts to subscribers of the letter, and of course those that are in the green room. We show them and we say, this is what we're doing right here and now. But if we send something out the night before, we have rules that are set up as to someone that is going to work, how to handle that.
Right.
Yeah, I mean, so the entry, other than being aware of, hey, you know what, this spread that we expected to be at a certain price now is so far away, it doesn't make sense. Right? That's kind of common sense when you go and check your quotes, but the entries aren't so critical as it would be to say, hey, you know what, I got to enter here, and this, the stop is at a certain point, but that brings back the money management that we spoke about earlier, and so you can make entries. I wouldn't say meaningless. It's so much less important if you understand proper money management. It's getting late here, Dan. So let's just take a quick look at the market. But you guys got the gist of what we're doing here. I think even more so as we look at these setups, right? So I look for topping tails, right? So this gapped up. It's not the kind of topping tail I want. It doesn't have the shock, but that would have been a nice reversal yesterday to have been aware of. But there were so many reversals yesterday, it was almost impossible to follow them all.
Yeah, it was Abbott had earnings, so we had it in our pre-market gap list.
Right. So UA is on my watch list. This is pulled back here to the 50, but this has earnings next week. So we're always checking that, and that's why I have my platform set up this way to look at that. Let's take a look at where the market's at, Dan.
Sure.
Let me get rid of these lines. It's exactly what we were expecting today.
It looks great. We have an out of the money put spread on the spiders, and we also have a covered call on the QQQs.
Right. So it's okay that it's not moving. Right? It's up. It's above the opening price. It's a narrow range day so far, which is what we talked about pre-market. That's what was likely to happen. And the video letter that I sent out last night to subscribers, what I told them is likely to happen, because historically, it's not magic, it's just historically what does happen after a day like we saw yesterday, which was a power uptrend. And those of you that are intraday traders, I'm happy to show you the definition of what we call a power uptrend, which is right there. And this was the red bar ignored concept, and
the 10-minute high that I mentioned is when you said we're going up.
It was right. You were funny yesterday. You said it was like 10:02, something like that. You looked at things in an exact way, but when I did the video last night, I didn't remember when I said it exactly, but it was right about here that option traders went all in, loading the boat on puts. And I typed into the room, I said, this is perfect for the market to continue to go higher. Because when those guys are just buying puts hand over fist, the market just historically doesn't go down. So it's a great thing to be aware of what these option traders are doing, but only when they get to an extreme, either too bullish or too bearish. Because when they do that, the market just takes their money. And that's what we look to do, take their money. Should we now, sell puts? They're buying puts. Is there an opportunity here to sell them those puts? And sometimes based on premiums and time to expiration, there's great opportunities. At other times, it's like, it doesn't make sense. But, in this case, the market should go up. And, today they started doing it again, not to yesterday's extreme, but it was certainly, I said in the room, I said, this is going to, and this was right here as it was going down. I said, okay, they're starting to load up again. We shouldn't be far off. And I actually thought it would come a little lower today.
Right.
Actually, I was looking for it to come into this area, but I said, if it forms the double bottom, that should be where it's ready to go higher. With that being said, Dan, we've run our time, and thank you all for participating here. And
and Neil, just real briefly, in our advisory letter, I'd say it's between 5 and 10 trades a week, because we give different types: stock, options, directional, et cetera. In our weekly options trader, I would say 4 to 6 per week.
Right. So we have, look, you don't want to be overwhelmed with so
Correct.
many ideas. But we provide sufficient ideas. If you didn't catch this one, there's another one coming not far off. So
Another bus.
yeah, I mean, there are the times where, Dan said, we sit on our hands because we're waiting for the opportunity to be provided to us that makes sense. Not that we're just, button pushers.
Yeah, Eric, we have all of our open and closed trades posted on in our members area. So yeah, we're very transparent on everything.
Right. So once you become a member to one of the letters and you log into your member area, every single trade is logged there with explanations. Dan is great at putting that in there, and all the closed trades as well.
And we're here, Master Trader Live, every Wednesday, 12 Eastern. Feel free to email Greg or me on any questions, comments, anything. We're here to help.
All right. Thanks, everyone. Have a great trading day and the rest of your week.